Hi there, Casey Stubbs here, and I'm going to be teaching in this video a price action candle that will help you trade the trends. So here's how it works. The very first thing we want to find is, so step one, we want to find a trend. So in this case, you can see we have a pretty big downtrend, right? And so that's the first step. Now, sometimes when you're in a trend, you don't know when to get in. It can be very hard to know when to get in because you don't want to buy or sell the bottom. You don't want to sell the bottom, right? So in this case, this looks like it's breaking, and why maybe you would sell this, right? And a lot of times traders will get in, and I'm guilty of this too. I get into the trade and it's too late. I thought, oh, it's trending, and then as soon as I get in, I sell, and boom, it comes out and takes my stop loss. So this is a candlestick pattern that one of my trading mentors has taught me, and he has taught me this candlestick pattern, and it works pretty well. And so step one is we look for the trend. And so in this case, we have a really good trend, and it works when the trend is really strong like this. Now, step two is we look for a pin bar. And in this particular situation, I had this red line here, and that's because there was support right here. And so I'll talk about that a little bit more later, but when I say look for a pin bar, this is it. See how the tail comes up and it bounces? And this was a support level. And so a lot of times you get pin bars bouncing off of support, and that's where you want to go long. And had you have taken a long maybe right here, you might have been able to get a few pips. It bounced 8 pips. However, with this candlestick pattern, it's a continuation. And so the first thing we want to look for is a pin bar. And you can see that the price pulled up, and there we have a pin bar. Now, once you get that, the next candle has to be inside of the pin bar. You see how that's inside of the pin bar? It didn't close below, and this is based off a close. It dipped below, but it didn't close. So we're waiting for that, and then the third step is if it closes, if it's inside of the candle, then the next step is to sell on the break. And so here we had it on this candle here. It would have broke. You could either do it, and this is preference and testing. I'm not going to tell you what to do, but just test it out. You can either do it on the break, or you can do it on the close. And either way, it would have been a winning trade, but this way you would have got a little bit more. And so step one is you find the trend. Step two, you find a pin bar. Step three is you enter on the break of the pin bar, which would have been right here. And so the entry trade would have been right here. You put your stop up above. And there's different ways to do the stop. You can do it up here above the candle, or you can use this 8-period moving average. And I'm going to be talking about that. This is a 8 or 9 EMA. I'll be talking about that in a later video about how to run trailing stops. So that would be your entry, your stop loss. And then if you were trailing with the EMA, you could have got out right here. So in this particular situation, this trade would have been a nice 45 pip trade. And so that's a great trade. Oh, actually, hold on. It would have been 22 pips. So that's another thing about using trailing stops. You give up a little bit of your profit. But still, 22 pips is a pretty good trade. Now, additionally, people are always asking, well, what color does the candle have to be? So here's a pin bar, and it's green. Now right here is a pin bar, and this one's red. And so my answer to that is it doesn't really matter, because sometimes the difference between a red and a green pin bar is only 1 pip and the time frame you're looking at. If we go to a 1-minute chart, this might have been a perfect green pin bar. If we go to a 5-minute, it's just red by 1 pip. So to me, it's not really that big of a deal what color it is. The way they teach it, they say that you use a green pin bar in a downtrend or a red pin bar in an uptrend. And so the difference is, we'll show you one of these in an uptrend, but in an uptrend, you want the pin bar to look like this. And in a downtrend, you want it to look like that. Okay, very ugly drawing, but that's the idea. Okay, and so this is a strategy, an entry strategy, but it can also be used just in conjunction with your everyday trading. It's just another piece of confirmation, another piece of knowledge, another way to make yourself a better trader. And when I see these, I get into entries. I actually made a trade just today. Let's go ahead and take a look at it here on this same strategy right here. Let's go to a 15-minute, and I did the same thing. So this was moving upwards. It actually was moving down, but let's go to a 5-minute. And it was moving up. And so we had a nice uptrend. And so we got the pin bar. And so you can see these arrows. These are my entries. And so I put my first entry on this pin bar right here. And this wasn't a perfect pin bar, but it was right here. It was a green pin bar. Normally you'd be looking for red, but then when we took off, we got my entry. And also on this one here as well, let's look at it on a 15-minute. See how it was red here on a 15-minute? And then I had my entry. And so the difference between this trade and the other one is this one was kind of going sideways, but I was just isolating this trend. See where I have circled? I was isolating this. So I had a big impulse move up. I had the pin bar, and then I had the entry. Okay, and so you can see on the breakout of that, I also used the trend line, which you've already been trained in the previous courses about trend line training, but now I had this pin bar as a double confirmation. And so I had the trend line break, and I also had this as well. So I did that, and even now as this trend's moving on, I'm gonna put another order on here just to show you how it works. So we have, this isn't a pin bar, but it's kind of a pin bar. Actually, it is a pin bar. It's not, it's a red candle. And so the trade is either over or it's gonna break. And so I'm now gonna add a pending order just to show you how this works. Normally I'd be like, oh, this trade is over, but really it's not over. And this is a great way to get into a trade once you missed the move. I don't like following, but if this is going to reverse, then it's going to reverse. But if it doesn't, well, I can just put a custom buy in here, and I can put a pending order right here. You see that? That's a pending order. And so that means if I buy it, if it breaks to the top. Okay, so now if it breaks to the top, I'll take this trade. Now, if it doesn't break to the top, I will just close this pending order and then reevaluate. But I'll give it a couple candles, give it like 3-4 candles to see what happens. If it just keeps moving down, well, then the trade is over. But if it breaks, well, then I get the continuation, and it could be a great trade. And another thing you want to look at is, as far as closing it, you could use this moving average to allow the trade to keep moving in your direction, or perhaps you want to just let it go 2 or 3 candles. One of the guy who trained me, he said just let it go like 3 or 4 candles, and then you can close the trade. So one thing I want you to do as your homework, and you can just reply to this and even post the images in the comments. It would be great if you would post the images in the comment section so I could see, but I want you to go back and find some of these, like we saw in that EuroCAD. Find some of these really good entries. Just like find a few and then post them in the comments as your homework. And hopefully this training will help you, and it's helped me a lot, and so I wanted to share it with you.